All right, I was gonna do another video. I honestly was gonna go and actually go and record an actual video today. I had a really great topic in mind, but things are just going bonkers. The candlesticks are going nuts. Everyone's talking about it, everyone's looking at it. So I thought, why don't we just jump right back on and actually go and talk about what's going on over here, in case anyone else is wanting to watch and anyone wants to go and talk about what's going on in the markets. If anyone has any of the opinions, make sure you go and share them. It'd be really great to hear from you. But the last few minutes, things have really taken turn. It looked like for a little while, it looked like maybe we have something happening at the beginning of the day when all the stocks were up 1%, 1.5%, 2%. But things have just begun bombing since then. And there was this pattern over a few minutes when Tesla, for example, a stock that I personally hold a lot of, and I know a lot of other people do, ARK Invest, and lots of other people as well. But we are seeing some crazy stuff happen over the last few minutes over here. Let me just turn on my graphs. So we started the day with just a few drops, followed by a little bit of building up, then another little drop, followed by a bit of building, and it looked like maybe somewhere around here something was maybe flatlining, maybe there was a bit of support, maybe people were saying, hey, 570 sounds like a good price to buy Tesla, and people were looking to buy. But along with some other tech stocks, we are just seeing some really big sell-offs happening just in the last half an hour to an hour or so. Oh, it's pretty interesting. Um, whoa, what do we got? Because we dropped down to the 540s, and it looked like on the candlestick, it looked like we were going to go way further south. But suddenly we're getting a little bit of resistance forming at 540. I really thought that maybe we're going to be seeing 400s for Tesla, which would be insane. And the street would be, I would be looking to sell my car to anyone who wants to buy it in the street in order to be able to go and buy some more Tesla. But it seems to be bouncing back a little. I don't really want to see what my portfolio looks like. There's definitely going to be a lot of red in there. But right, we seem to be climbing. What's happening? So it's interesting because if you look at the industry as a whole, there's definitely not been anything anywhere near the same happening on the S&P 500. So overall, the S&P 500 I think is down what is it, 1%? What do we got? Yeah, 0.7% down for the S&P 500. So it's not really a lot at all. But if we then look at the candlesticks on some of the tech stocks, they don't look anywhere near as good, especially these last few minutes. And it's just interesting. Is this the end of the week when people are really beginning to accelerate the sell-off? So we're 2 hours into the trading session now. And are we seeing the beginning of some of these sell-offs continuing on after it? So it was the first like half an hour, not much happened. It was kind of flat. Things weren't happening. Then we began sending things off. And now it looks like, especially with Tesla, is this just another one of these? What is it? 1, 2, 3, mini, 4, 5. Is this the sixth small resistance barrier that's just about to be broken, and we're heading down into 400s? So we're going to lose 50% of the value of Tesla in just a few days. That would be quite interesting, quite incredible. What do you guys think? Are you buying? Are you waiting? Are you hodling? Are you planning to get more? Make sure you tell me in the comments in the live chat. It'd be really interesting to hear your thoughts. I personally am just holding on at the moment. I have no idea. This is sort of a really strange situation. It's not like a day crash. It's not a bear market. It's like a lot. It's going way harder than any typical bear market, in my mind anyway. It is not a crash really, because it's just like breaking on several different days or a 2-week period now. Really, I think we started like in the early, like, what was it, 20 something November? I can't remember what it was. And it's not really sort of a one-off correction over a short period. Maybe it's going to be one of those 4 to 6 week slower corrections like has happened. I mean, like in March we had a somewhat slow process before it began climbing up from there. So we shall see. Pick the worst week to begin investing. It's certainly diving in at the deep end, Elliot. That's that much for sure. But actually, if you're investing like right now, I would bite your hand off. If I was like first putting a bunch of money into the world of investing right now, I'd be saying things are on sale. I thought things were good yesterday when I was buying, but things are really good today in sense of pricing because I keep saying the same thing, but to me, I always get amazed when these kind of things happen because they do happen all the time, and there's a lot of reasons, macro reasons, other economic reasons why they happen. But I always get amazed when like individual companies get picked, like for example, Tesla is being picked at the moment in terms of where people are selling off these positions, and when companies just begin being sold off without really any particularly good reason why for that particular company. So, for example, with Tesla, we haven't had any news that significantly affect anything about them. Sure, like a few days back, there was some news that they're pausing production on one line in one factory for 2 days, and then they were saying that due to components issues with there not being enough stock of microchips, that they're going to be pausing for 2 weeks on another plan. But in the grand scheme of things, those are tiny issues, and they're related to the demand for products rather than the supply more so. So it kind of sounds like it's supply because they're not getting the supply of the parts, but the reason they're not getting supply of the parts is because the demand is outstripping the ability to produce those particular chips by the people supplying them. So I was getting amazed when they dropped so far. It does happen all the time, as I was saying. It's just fascinating when you go and look at it. And AMD, another one of my favorites, is down to 75. I thought it was cheap at 80. And it doesn't look quite so bad on this graph over here, but let's look on the day. So we were at 74, and look at this. Look at this. We were starting like pre-market was up. I think when I was looking, starting over here at 80 and down like almost 10% before a small amount of recovery. Tesla's down. Oh, we're seeing a bit of a bounce. What's that about? 0.5%, almost 1% back from where we were at the bottom, which is nice. And this is bigger. So these are bigger than any of the previous ones we've seen over the last 2 hours. I have a few SA Tech stock and renewable energy just lost 3% to it. 3% is good, Mike. Mike, you're doing good. You should pat yourself on the back. Look at you. Look at poor people like me who are like, look at my Etoro portfolio. Is probably one of the funniest things to look at. So take a look at this. Look, $3,000. I'm down to 2.3, mainly because I put all this in at the peak of all of these Tesla and Bitcoin. Those are the two holdings that I really have in here. If it makes you feel any better, laugh at me instead. So that's quite funny. But yeah, we're seeing definitely a lot of a jump back just in the last 5 minutes, really, or 10 minutes since I started talking about it. Do I reckon SpaceX rocket failure exacerbating the drop? I don't see how it's related in any way because one, they actually landed the thing in the first place, which is an unbelievable advantage. You know, like sure, it exploded 8 minutes later, but the fact is it sat down, it landed by itself, and compared to the previous two attempts, which didn't seem to affect anything at all. And also SpaceX is just an entirely different enterprise. Sure, they've got the same guy at the top, but I mean, the stuff they're doing with Starlink is so crazy. And like, if that company goes public, that's going to be that's going to be Google level stuff. Like if a single company that is able to then essentially control the flow of internet in ways and potentially advertising around it, I think that the opportunities there are crazy. It is a lot of red, Michael. Yeah, watch this. So everything is down. Everything is down. Seeing a bit of recovery. So look, Apple is climbing back up over here. Nvidia is climbing back up over here. So is AMD. Everything is suddenly climbing back up. We seem to have hit like 2 hours into the trading session, this bottom for everything. So AMD was down 10%. Nvidia was down 470. What did they start at? Yeah, like they were down 5% ish, maybe 4. Where am I? Tesla's down, but but they all seem to be doing some kind of small recovery for the last 15 minutes. Tesla remains almost $100 down. No, sorry. What am I saying? It's been a long day. $60 down, 10%. Slightly over, potentially, maybe, depending on where you are within those candlesticks. But yeah, we're sort of sitting flat now. What's everyone else like? What are your guys' portfolios like? Are you broadly invested, unlike idiots like me? And are you sitting nice, saying, yeah, nothing much is happening with my normal people stocks that don't have crazy fluctuations? Or are you like me, where you're sitting and everything is red and you've lost all your money? Which one are you? Tell me. Ray is thankful to be only 9% down. 9% on average is harsh, man. What are you carrying? If Tesla's down more than that, and like one or two companies are like that, I mean, I'm down, but not quite that bad. Is that just today? I know it's minus 30%. Wow. Is that clean energy? What have you got? Elijah said that when starting IPOs, we're going to have a focus on benefiting retail investors, according to Elon Musk, rather than institutional. Yeah, good luck with that. I'm interested to see how exactly he's going to be able to make that happen, unless he has like a pre-IPO sale, which will somehow be restricted to individual investors before. But I think that can get real messy real quick as well. What do I think of Etoro? I use them. They have some big drawbacks and some big advantages. I actually have a video which I've made recently where I talk about starting up with them. I was meant to do a review with them, but two things happened. One is a bunch of other things began happening with Trading 212 in particular, and a bunch of other things with some of the other YouTubers and a million other things, and I began making videos about that instead of talking about Etoro. But then the second thing happened, which is, so if I make a video like a full review of Etoro, you only really make that kind of video on YouTube for it to kind of sit there for months and years collecting traffic. You know, you're going to put a lot of effort into thinking through what you're going to be talking about, showing stuff on screen. And as it stands, this is what my Etoro portfolio looks like. Number one, I haven't done anything with it since I went and bought stuff at a hugely overinflated price. Number two, I have this massive loss over here, which I don't personally care about. But if I want to go and spend all that effort making a video, I better go and at least maybe wait this whole period out, because what will happen is the moment I start showing people around and talking about it, people will switch off. They're like, what does this guy know? Especially people who don't watch my channel, who don't really care about maybe the honesty factor or the transparency factor as much as they care about other factors. So I think this video would just like not do very well and not actually reach that many people. So the moment people don't watch it as long or whatever, then that kind of self-perpetuates into a problem. So I'm just waiting for that, really, to be completely frank with you, because it just doesn't make any sense. I'll make the video and nobody will watch it if I do go make it. But in terms of positives, there's a lot of positives with Etoro that I think like a lot of people forget how you can take advantage of platforms as well as platforms taking advantage of you, right? So Etoro have this 0.5% fee for loading money into your account, unless you can figure out how you can load it through Revolut or somewhere else, where you put money straight in dollars instead of having to pay that fee. Although for other platforms, even if you save money, you're still probably going to be paying like 0.4%, so you're probably not going to be saving a huge amount. But anyway, once the money is in, you then don't have to pay any forex fees at all, which now makes Etoro the only platform in the UK where you don't have to pay those forex fees. And so you pay the one up front, but if you then trade multiple times, then even trading 0.15% will suddenly become more expensive, if that makes any sense. So you do then pay another 0.5% when you draw down from Etoro, remember. So it's like a 1% total that you're going to be losing. But if you're planning to keep the money in for quite a while and move between different stocks over time, you probably find that it's actually now become, because of what was announced over the last 24 hours by Trading 212, actually maybe this is the cheapest platform, potentially. I'm going to make a whole video about this, actually. I was thinking about this earlier. The second benefit is counterintuitive again. So the platform only works in dollars, and that seems like you should want to use it to trade US stocks, right? But actually, this is the cheapest platform for trading UK stocks, which is, again, really weird. And the reason is because they are an international platform and they have complexities in how they deal with some tax issues in different jurisdictions, etc. The way they've structured it is, and I think it's not because they're nice, but because of the operational difficulties, when you go and buy into UK stocks, they don't actually charge you stamp duty, and they pay the stamp duty themselves on your behalf. And that's the only platform that doesn't force you to pay stamp duty when you buy UK stocks that trade on London Stock Exchange. And that means that if you want to buy into UK stocks, it's actually cheaper to do it through eToro than through the other platforms. Again, sure, you lose the 0.5 in, 0.5%, 0.5% out, but you save the 0.5%. But if you buy multiple UK stocks over time, so you save more than one of that 0.5% fee, then suddenly eToro can also be cheaper for that. And also you can buy things like this ARK Invest, where I just put $50 in just to have a look. Notice this is a CFD, but it is an unleveraged CFD, which means there's no fees associated with it. I don't have any risk. I don't have I'm not borrowing money in order to be able to buy, but it's sort of a way of being able to buy into stocks that you can't buy somewhere else. So for example, if I go and type in VOO, I can buy, the Vanguard S&P 500 that trades in the US market here, but I can't go and buy VUSA, which is something, there's no VUSA available, which is the one that you can get in Europe and the UK. So there's a lot of interesting bits there. If you want to go and try it out, they've just dropped the deposit from 1,000 to 500, although I think it's going to be dropping to $200 minimum very soon as well. If you go and use my link, then I'll get a bit of a kickback from them, although you will get absolutely nothing. Nothing. So, but I'd appreciate it if you want to do that. But anyway, let's jump back in and see what's happening with Tesla. It's just staying flat in the 560s. When I did a morning feed this earlier, not morning, morning US time, when the stock market just opened, and we were sort of sitting around this area when I was finishing, and it kind of seemed like a good time to leave and actually go and make a real video. But oh my God, what are we doing over here? Are we recovering, or are we just taking a bigger breather before the stock market goes and begins doing really funny things towards the end of the day? I'm not going to be covering what happens at the end of the day because I actually have better things to do, especially being based in the UK where it's slightly later than 4 o'clock, the market's closed. But let's see. Wow, there's a lot of people here. I didn't realize. I thought I was talking to 5 people who were watching my live stream, but thank you very much for joining, everyone. Let me just sip my cup of tea. That's how I like to watch these things. What do I think investing in an IPO? I saw Deliveroo going public soon. The thing is that Deliveroo, there's so many companies. It's really difficult to know because it is really difficult to know how a company begins behaving after the IPO. And there's plenty of examples where things begin going really well for them. I went into Asana early when they IPO'd, within a few seconds, I think. And I went really early again within a few seconds of Palantir. I think they were on the same day. Correct me if I'm wrong. I think those two came out on the same day. But I don't do it very often because sometimes when I think I know enough about the business metrics and I've looked into them before and I've done some kind of thinking around the share price, maybe I'll go, but I don't do it often. I often like to see, because often in the first day, if you're not careful, you can lose a lot. You can also win a lot. But the volatility is crazy, depending on how the market feels on the day. Can you trade option calls in eToro? What's it? So eToro generally is designed as a sort of, so if you look at the way they've built it, they're trying to attract people who are traders, if that makes any sense, although it's not really a trading platform because of the fees associated with CFDs and with any kind of other products that you can buy other than just regular stocks and shares, ETFs and things like that. There are quite a lot of fees attached. I'm not going to go list. There's a lot of them. You should go and read in the description. It's not all these flashing things. This is probably one of my biggest downsides of eToro, which is they're trying to make it look very much like it is a platform for active traders, day traders, swing traders, that kind of stuff. But yet it doesn't really have. So if I go and click on something, it's trying to be so the moment when I'm in this screen over here, on the home, where is it? Watch list. It looks like, oh man, I need to quickly go and buy and sell stuff. Look, it's flashing red and green and red and green and quick, pulsing. Then I go and buy some. Then I go into something, and suddenly it becomes like a social network on the next screen. And this is the thing. I'm not sure if they know what they want to be, because there's the whole social element where you can post stuff about companies that you're investing in. I go and look at the charts, and the charts they could be better. For a company that is so big, so international, the data I think can be better. In fact, I actually think so. All of this information is somewhat like the trading 212 information is better, and they're a relatively new platform, and actually a lot of their like tech is behind a lot of companies. But so I'm not sure what eToro platform is for. They allow you to trade a bunch of funky stuff. Um, oh, look at this. But my kind of problem is I don't know what, because they try to position themselves as doing certain things. But oh, what am I doing? Unlike the other platforms, the one thing they don't have is they don't split their portfolio. So everything's in the same place. So you got crypto in the same place, you got all the other stocks and ETFs and stuff. But when you're looking at the individual, any individual one, let me just click on one. It doesn't really matter which one. When you then go to trade, you can then select CFDs. Yeah, you can then. This is a bad example, but you can then basically go. Oh, it's because I'm on a sell. Oh, whatever. You can then basically buy CFDs within the same space, but they don't do any complex instruments really. It's just it's positioned as a trading, but they don't do like complex options or anything like that. It's just if you look at the options available, I think that I'm realizing what I was actually answering. You can trade currencies, commodities, indices, crypto, ETF, stocks. But it's not really that kind of program, if that makes any sense, especially with the fees that they charge as well. Anyway, let's go back. Ooh, we are beginning to go back south on Tesla. We have done our small mini recovery and we're going back down. Wow, what people are watching? What are people saying? What do I think about the new fees being introduced? Would it be worth switching platforms to something like free trade? You should watch a video that I released yesterday, a full day before most people got the notification. I released a video about that fee. And yeah, Trading 212 weren't very happy with me about releasing that video because it doesn't look good for a platform. So they've spent years and years building up this big image of we are not like the other guys. And this to me is like the actual fee itself. I don't think it's a bad. I think it's good. If they started out with it, I think it'll be perfectly fine. I think it probably more than covers. So I think they get a small profit on it. It doesn't just cover the actual cost of the forex for them, and I think that's okay. A platform needs to earn money. A platform needs to have the capitalization to be able to do your trades. The platform needs to be able to pay their employees and staff so they actually have support that answer your queries in less than a week or 2 weeks time. I think it's a good thing. I think there should be some fees involved because otherwise, if there are no fees involved, the obvious question is, are you the product or is there something underhand going on? You begin questioning it. They spend so long telling everybody that they are the platform that is different to everybody else. They're the ones that are free. And like in that video that I posted, I even inserted a segment of their ad where they're talking about how everyone else is just, like earning so much money from the fees and how dare they charge fees for a service that should cost fees. And I find it quite amusing now because we're now in a situation where, well, they're doing exactly the same thing. And it kind of like puts into question the integrity, in my opinion, of a company that for so long has been so strongly saying really negative things about all the other companies for doing exactly the thing that they're now choosing to do themselves. And the ridiculous thing is, in the meantime, they've also been saying that they are very profitable on the ISA and invest accounts without the CFD side of the business. On their own forum, they posted, I think in January latest, they post this thing regularly saying that because of the size and scale of their business, they can lend out a lot of the shares to short sellers and stuff, and they can then earn interest on the cash sitting in people's accounts. And those two combined, pretty much the main two revenue streams, are enough for them to earn sufficient money on those two products that it actually covers the cost and turns a profit. That's what they've been saying. They're saying they're really happy with it. And they're saying that the further they scale, the more profit they'll be able to make from it. And that's their business model. And the last time they said it was several weeks ago. It was in mid-January, I think. And then to make that U-turn, I kind of feel that what happened really, like, again, I have no idea. I do not know Trading 212. I communicate with a few of the people who everyone knows in the community who are like from Trading 212, but that's it. I have no relationship with them other than that. And it kind of, to me, looks like they were at some point planning to do this, but the events kind of like unfolded. So the whole GME saga happened because of the massive influx of customers. They had to suspend it, and they were planning to suspend it for a short period of time. But then they kind of thought, well, at some point we were going to introduce these fees. Since we suspended the new accounts, why don't we do that? Move that forward and make that tech change, and then we'll reopen the new accounts once the new fee hits. I think it's sort of a combination of just things happening, but potentially them already having plans. That's just my view based on the sequencing of how things have been happening. I have no idea, but it just looks like it based on the dates and the timings of how they've been doing certain things. What are people asking? Time to go shopping yet? Oh man, Roy, if I knew, I did my shopping yesterday, and it turns out I was shopping way early. I'm still very happy. I think I still bought at a price that I'm extremely happy with. But I can't tell you. If I had more money now, I'd probably continue shopping, but I don't have anything. I invested my last £4.88 this morning that I had from one free share that I found that I sold. That's about it. Elijah says about trading to 1-2. I'll be fine with it if they made adjustments for dividends, paying to transfers to transfer to pounds, just to pay against the reinvest. See, I think they have several issues. One is they've previously indicated. So when you now retrospectively look back at some of the actions they took, like for example, asking people what features they want, and then not ever implementing over 2 or 3 years the one feature that always tops the charts, kind of indicates that they always had a plan, probably, to go and introduce a feature which charges fees. The fact that they're not allowing people to switch their non-ISA accounts, because ISA accounts have to be in pounds, but regular invest accounts into dollars now, kind of indicates that this is a very profit-making move for them. They don't really care about the customer base. Like, they could have easily either allowed customers to switch to dollars if they chose to, or grandfathered some existing deals, or at least allowed existing customers to have a longer window than the minimum that is allowed under the law, which is the 30 to 60 days, which is what they've, like, depending on which change it is that you're talking about, which is what they've done. They've taken none of those. So to me, it kind of shows they don't really care much about the existing customer base, other than that they now have this base to make a lot of money from. That's just my view, based on, them not taking any steps that go anywhere above and beyond the bare minimum that they legally were obligated to do. Elijah, make sure you check the parent company as well. So Elijah says that you pull the income statement from the government website. The UK limited and their overall group look very different. Breeze Agent, during the GameStop squeeze a month ago, when the hype was massive, trading 212 servers went down for 2 hours. Yeah, the same issue happens with everyone though. Etoro was down for a day, like last week or earlier this week, whenever it was. Last week, I think. Free Trade had to put restrictions in because their third-party forex provider cut them off for an entire day, and that you couldn't trade non-pound stocks because they couldn't convert any currency away from pounds. This is the issue. Like, non-robust platforms who are relying on third-party providers who themselves are maybe not as robust as you'd like, because these platforms are free and they don't have the years and decades of investment. Like, this is just difficult, and none of them are perfect. And this is really important to be aware. Like, there's not one good guy and other guys are bad guys. It's not one of those stories. Everyone has their own like, look, I released 2 videos recently where I wasn't that positive about what was happening with trading 212. And here we go. I am showing you a trading 212 screen, and that is where I'm currently investing. And I said that in all the comments, and it's like, yeah, just because I think that some of the things they're doing maybe aren't the best or aren't great, does not necessarily mean that I also think that I should immediately stop using them, because it's not like the other guys are generally good, but it's like with any other company. So I use companies. I said tons of really great stuff about trading 212 over the last few months. Like, if you look at most of the videos before the last 2 weeks, everything was really positive. They were like #1 in my list of the best investment apps in the UK. I said, like, when they released their price feature, I was massively happy because I thought that was the first step towards building something more like what Etoro do with their copy trader. So I do say good stuff when I see good stuff, including about trading 212, because there's a lot of stuff I like. Like, in terms of the sophistication of the data, like what I'm showing you on screen right now, in terms of the reporting, like they show you the full P&Ls and balance sheets of all the companies dating back by quarter, by year. Like, they are doing this better than what both Free Trade and Etoro do, in my opinion. This is just like, I think this is a much better solution, but when the same company that I really like does something that I don't like, I'll say that too. Just like, but like I don't. I think some people on YouTube are very wary of saying stuff that it may be construed as somewhat critical, because we all have relationships with these companies. Like I have a referral link to Trading 212, so when they do accept customers, I would potentially want to send people over. Apologies, I think one of my cats is snoring somewhere. In case you're hearing a weird noise, I can't see where it is, but that's what the noise is. In case you're wondering. I should probably take these off now, because I had these on because I had some notifications that I needed to be aware of. But I'll go and move that cat in a sec if it continues doing it. That's what we get with lives. With lives, we can't cut it out and redo that segment. So yeah, so with every platform, like we have these referral links, and we want to go and promote the company. And the problem I have is a lot of people who talk about personal finance in the UK in particular will never say the negative stuff. They'll never call companies out when they do something bad, because it will hurt their referrals, right? It will hurt the number of people who go and use their link. People won't go and click the link. But it does, like, to me, I think you need to say both sides of the story with everything. Like with, I don't know, with pensions. Like recently I made one video which put out like some information about UK pensions that maybe would change some people's opinions about how much they need to put into them over time. But I was literally just about to film another video which was pensions versus LISA versus ISA, about talking about where to prioritize investments, from my personal opinion. And that video was going to be far more positive about pensions. And yeah, it's just, I think like it depends on what you're talking about, but it's just really critical for me to make sure that we're really honest and upfront about all of these things, and we call things out and we say them how they are. Some recovery in Tesla. Yeah, so is it a recovery? Like the size is jumping, the volumes are jumping. I have no idea. And 570. I mean, like, sure, it's a recovery versus the 540. Where were we? Like 540. Oh man, yeah. Sure, it's some bounce back, but wow. At the beginning of the day, when we were sort of like opening up, I was talking in the first few minutes, like it looked like Tesla might be going back up. They were like here, they were like up a little bit, and then over here, it just looked like maybe we're just not going to move anywhere on Friday. But so, given that we're only 2.5 hours in, anything can happen. There's still a long way to go until the weekend starts, and then we have Monday. And the bad thing about Fridays and Mondays is, for whatever reason, the world has decided that, generally speaking, if they're going to have a bad day in the markets, it has to be one of them, because people like Black Mondays and Black Fridays. But yeah, it's just one of those. Everything is red. No, not everything's red. Only the things that I'm invested in, especially the things that I've invested in more recently. So I apologize to anyone holding Tesla. It's probably just karma. Train 2 does pretty. Have we got any questions here? Things are moving up. Last 30 minutes here. Tesla. So should we have a look at just some of the other stocks? Because I've got Tesla screen open and it's pretty boring. Let's look at some of the other stocks. So what do we got? So Adobe down, but having a slow recovery over here. AMD, same story. Is everyone doing the same kind of thing over here? Google does its own thing. Google doesn't care. Even Amazon got pulled into this. What do we got? Nvidia, same. Fiverr. Fiverr's like, everyone seems to be following the exact same trend, which to me is a really, really good indicator, because it just shows that there's macro things at play, and it's literally nothing to do with any of these stocks. It just, like, look at Apple doing exactly the same thing. It just, to me, says great. Like, people are buying and selling all of them in group without any care. Look, exactly the same curve shape over here, without any consideration for whether like that particular stock is actually a good long-term hold or even medium short-term hold. So that's actually a good sign to me. Even when things are falling, if everything's falling, look, they have the same periods over here where there was some resistance, but all the stocks seem to be doing exactly the same thing, and like that is a positive sign in my books. But maybe some people disagree. Oracle up while the rest. Well, Google is as well. I mean, like, I guess some of the companies, especially the older school companies, or maybe companies that are not as, what's the right word? They are very tech, but they're not the sort of like new type of tech, if that makes sense. They're sort of way more ingrained into older school industries in some ways and provide other services. Perhaps it's that. Because like if you look, for example, at some tech indices, they often don't include some of the giants like Google in those indices for that reason. What do we got? Square doing exactly the same thing, actually bouncing back a bit as well. I apologize for the snoring in the background. My cat is having some kind of dream or something. And I would go and kick him out, but then you're all going to just see an empty chair, so. What do we got? Tesla. Tesla's still bouncing fine. So, yeah, it looks like it wasn't. Look, we're going back down, sort of jumping around. Just seems completely unclear as to which way we're going. What are we looking at? See, somebody's saying I should look at this guy. Oh, I need to go to. I need to go somewhere else to look at it. Let me just open it on Google because I can go to my invest account, but I don't want to do that. What are we doing? Oh, okay. Yeah, I don't really play in these kind of things, so I'm not. Unless I know a lot about the company, I don't really ever go into there. So that's not for me. So it's interesting because if I just close, what do we got? Texas Instruments is doing okay. Twilio is doing the same recovery. So it looks like the same. Everyone's now hit this position where they could go either way, and we're not quite sure exactly which way it is going to go. It's kind of interesting, right? I should probably read what some of the people are saying, so I apologize. I'm going to take just a sip of tea and see if anyone's saying something interesting and important that I completely missed because I'm just rude and just been looking at my screen without caring what everyone's saying. I'm seeing a few people are asking just like what my view is overall on Tesla. Yeah, so my view is Tesla for me is a very long-term buy. They are currently in a heavy investing phase, which is only going to be completed fully in terms of the results of that investment at some point like mid next year. And that's without accounting for them doing any further investment in terms of expanding some additional production lines, in terms of building new factories on top of the ones they're already building, in terms of potentially building a second California-based venue if they can't go and increase the existing production line or open up another one somewhere in the US. Like, I think for me, it is so early on in their journey. As it stands, they have like 1 and a bit factories realistically operational. And come end of this year, going into next year, we're talking about a huge, like a behemoth increase on that. But yet when people make valuations on models, I don't feel, this is the point I made in one recent video, this doesn't in my mind translate fully into what the valuation of those companies is, because they don't see it in the performance that gets extrapolated in top-down models when they look at overall revenues, overall costs, etc. That R&D doesn't really ever fully go into what the projection should be, and that to me is why I have a slightly different view maybe to some people on Tesla, which is that their past performance is actually super strong, and just based on that alone, you would think that, you know, like the numbers are looking good. But if you then go and begin looking at what their what my expectation on their projected numbers is going to look like, especially given they're building the Berlin factory, given they're building the Chinese, more stuff over in China, etc., given the potential of opening an Asia plant in South Korea or Japan as is being mooted, I think the cost base for production and delivery of some of the smaller cars in particular for those markets, because those markets will be buying the smaller cars. Everyone's really focused on Model SX, but actually the money is going to be made on Model 3, Model Y light chain. I think the margins on them are going to be incredible when it comes to those factories being fully operational and really optimized. And that is where I think the big value is. And I'm not hearing many people talk about that. And I think people really need to be talking about it. Unless US launches another round of stimulus and markets continue to tank. Well, yeah, I think there's opposing views on exactly what the impact of that stimulus check is going to be and exactly what people are going to be doing with it. But what are my thoughts on Adobe and Nvidia? I'm holding and I invested in both in the last 24 hours. Um, for the same reasons, like I the sell-offs and the graphs and everything that's happening with them is in my mind in no way indicative of the actual company's performance or their future expectations or anything. It's just to do with the overall market sell-off of tech stocks. And so I went and bought Adobe, I bought Nvidia, I bought a lot of AMD. I bought them like somewhere around here yesterday. So I'm down on all of them, but like I'm very happy that I bought them at a massive discount versus where they would have been if I didn't. So I'm still like for the long term, I'm still pretty happy because my average is still really, really low on them, in my opinion. What are people saying in the comments? Hope Micron goes back. Unless would it be a good idea to get a US dollar account transfer money trading to 1-2 that's saving multiple forex fees? Unless you set up your account in US dollars with trading to 1-2 when you first created. And I can't even remember that being an option when I was creating it. Maybe it's changed since I started, or maybe I didn't notice. But your account is fixed in one currency, and unless you create in that currency, you can't then change it afterwards, and you can't have more than one account with trading to 1-2 as part of their terms and conditions. So you're kind of locked. So there's no way of sort of like creating a second currency. But if you create it in dollars, then sure, then there is definitely a way of saving a lot of money on those exchange fees. I've missed so much stuff, guys. So many people commenting. Let's see. Trading is a net zero game. I think trading is a losing game for the vast majority of people. I made a video about it some time ago that got approximately 0 views. But I think most people, like, there's so many influencers, so many people selling the dream, so many people telling you that you can make a lot of money with it. And the numbers don't lie. So it's something crazy, like 95% of people will like lose money, and the average loss on a day trader over the course of a year is 34-38%. I can't remember what it was. I watched like a segment of it earlier today, which is why I remember it. I made this video because I was just looking and wondering, like, what should I do with it. Yeah, it's just one of those, especially with the fees, unless you have access to a lot of money where the proportionate fees are going to be very low, and access to systems where you're paying like proper institutional kind of rates rather than retail investor rates. Unless you're in that position, it's just so hard, and it's like it's pretty much impossible really to really know unless you have some kind of crystal ball. That's my view. A lot of people disagree and say, well, I can understand what the sticks are doing, I can trade on the swings, and I just don't think that that's true or the case for the vast majority. Maybe some incredibly smart math geniuses out there are better than me at understanding that stuff, but for me, I just don't think that's actually a viable option. And I think for the vast majority of people, it isn't either. So there we go. Do I think a large proportion of retail investors simply gambling? I think a lot of the people who are fast moving between different stocks and trying to like buy the highest risk stocks, especially the stuff you see on YouTube where somebody's like, hey, look at my portfolio, I'm up 120%, booyah. Or you've seen these videos, right? You've seen them. So much flexing in this space. Yeah, it's just ridiculous, that whole thing. It's like it doesn't really add any value. It doesn't really, in my opinion, do anything good for anyone. It's just, yeah. And the problem is a lot of people watch them and then think that that's normal. So I actually get comments on my own videos where people say, oh man, you suck. Like I made 35% in the last month and you only made whatever 20% in the year. You suck. And I'm like, great, good for you. I mean, like, try doing this for a long time and show me consistent returns of 20% plus per year. I don't have it, but I'm saying, but then I'll think you're really good, sure. But the fact is, like, it's just so much pretend, so much like BS where people, on a platform like Trading 212, for example, there's this number. So I'll show you here. Where are we? So there's a number here. So see, mine is minus 2.9%. If I went and closed all these positions now, and then I went and bought some kind of stock, and then like a very volatile stock, and then that stock, like a penny stock, whatever, like when it exploded in the next few days, this number would then show that I'm making a ton of money. It would not account at all for any of my past performance because it's just the relative value of the stocks that I hold right now versus the value when I bought them. And it's like all the trading platforms, they have this, there's a way to game it so that it looks like you're a baller and you're making a ton of money, and everyone just goes and abuses it, and it's just a complete load of nonsense. But anyway. Oh, thank you very much. I got a £5 tip. I'm going to buy yourself a beer on Friday night with that. Thank you for sharing your thoughts on Tesla. Guys, be sure to sub to this wonderful man. Well, thank you very much. I really, really appreciate the kind words. Yeah, I didn't expect that. Thank you. Are you switching ISA platforms for next tax year? Very good question. I'm literally thinking about it right now because as it stands, I am not convinced. And I do appreciate with ISA platforms, you can actually move. So you're not bought it. People think that you bought in for the whole year. And there is a way of transferring your ISA from one provider to another and then being able to invest in that other ISA, even if you invested in the first one during the same tax year. But the rules are that you have to transfer 100% of your first ISA over, and essentially that account is then dead. So it's sort of like a one-way street move. You can do that, but I don't really want to do that because then that restricts, you have to wait for that transfer process to actually happen, and that will take some time. It's not going to be a one-day thing. If you've dealt with the customer service of any of the companies, you'll know that just a basic answer takes a long time, but something like that will take days, probably weeks. I don't really want to get into that in case there's an opportunity to buy and stuff. So I probably will make a call on it. At the moment, I'm sort of like in two minds because there's the one side which is Trading 212 is still the cheapest ISA provider out there for stocks and shares, and they're good in lots of ways, right? The platform is good, and I like a lot about them. But Free Trade has slightly more transparent ethics and stuff about the company in terms of their pricing structure. Up front, they began charging fees, and they're very honest and open about it. What I like about them is, so they add more features. For example, they added some extra features like stop losses, limit orders, and a bunch of other stuff. The 3% interest on cash, and then they made a plus account, and all those things live there. So it's annoying that you don't get them for free. I'm with you. Like it's Trading 212, you don't have to pay to be able to do stop losses. On Free Trade, you do. But they don't do what Trading 212 is now doing. They don't say, well, you had this account that offered you something, now we're going to take it away and we're going to then charge you for it. What they do is they add some features in a bulk kind of way, and then they say, okay, you have to pay for it. So they added SIP accounts, and you have to pay a monthly fee in order to have the SIP account, which I do because I really like it. And I think it's game changing in terms of pensions. It's like really revolutionary. But that model to me is just so open. If you go and subscribe, so both the CMO, I think it is, and the CEO of the business are on Twitter, and they just say everything like black and white, transparent, like they will tell you how it is, and they post like some of the approaches they get from parties wanting to do dodgy stuff. It's pretty entertaining. You should go and subscribe to them on Twitter. It's quite good. So I like them a lot for that. I'm not sure where because if I start out with Trading 212, but then the fees rise further, or there's some other restrictions put in place that you then have to pay additional charges for, that, like, would I be annoyed that I didn't start off with Free Trade? I'm trying to make the decision right now. I haven't got an answer yet, but I will do, I think, in the next 2 weeks. And I think what I'll do is I'll probably make a whole video where I talk about it and the pros and cons and the things I basically was just ranting on just right now. Sell your Alphabet stock to buy Tesla? That's a good call. That's a good question. It's a good question. I do have big expectations for Alphabet as well, though, because I've been sitting here and we can easily be having one of these jumps on Alphabet as well. And it's not a huge amount of money. To be fair, I'm already overexposed. Look at this. I've got 18 shares in Tesla. I'm already like overexposed big time. Like, do I need to go 100% in? I don't think I do. I think like this is pretty good as is in terms of the potential upside in the swing. So yeah, another live stream. I wrote a script. I do my computer. I wrote a script, and I was about to make an actual video and post an actual video. And I was going to talk about where you should put your money in terms of investments. So pension versus LISA versus ISA, and sort of like, cause I get asked this question every time pretty much I post a video, and so I thought, let's do an actual video where we actually talk about it in a proper structured way. But then I just saw everything crashing. By the way, should we just go back? Because I'm just chatting, and you guys are looking at a screen which is showing you nothing. Nothing. What's happening with Tesla? We're just swinging around now. Now that we've lost 10%, we are happy to just be sitting at this level, 10, 11%, whatever it is. Okay. So yeah. So I thought let's do a live stream instead. These live streams do not do well on YouTube because after I've done it, nobody will watch it again. It's so long, it's so boring. It's just a guy ranting. There's no structure to it. There's no point to it. But I thought, well, uh, it's a bit more engaging, and seeing this stuff is really happening. We should probably talk about it. Oh, thank you very much, Thomas. I really appreciate it. Another $5 there. Another channel refreshing on us. Thank you. I am going to do some collabs. They are coming. One is coming in probably 2 weeks. I'm not sure if it's just... Yeah, I think I might be doing two different things with one big-ish YouTuber in the US that you might know. So that'll be exciting. Yeah, going to be doing two different things with that person, and then I'm doing one with... we haven't actually arranged exactly what we're going to do, but we're going to do one with Damon Talks Money as well, because I really like the guy. I think his channel is great. If you haven't subscribed to him, make sure you go and find his channel and subscribe to him as well. Because out of the UK YouTubers, I think that guy is great in terms of the kind of videos he produces. Really like his content. To be fair, there's not much in the UK personal finance space that I really do like, but I really like that guy. So we're going to be doing something with him. Thank you, Thomas. That's wrong. It's approximately 16% down in the last week, approximately 34% down in the last month. Yeah, when I went live, it was down at about 840 Vero. So it was more like 40%. I actually did the maths to make sure that I wasn't. I think it was like to the nearest like whole number. It was 40. I was literally going live around about when these candlesticks down here were happening, and it was like at 540 or so. So I think it was about right. So gamblers don't tell you, but I made that point in a couple of videos, but they were really old videos way before my channel grew, and so nobody probably seen those videos. But it's like, like when you go into the office on a Monday, and then usually, well, not that anyone's going to the office on a Monday these days, but when you used to go into the office on a Monday, there'd be that guy sitting across the table from you and he would always talk about the gambling that he did at the weekend. And there's always be, well, I won on that bet, and also, oh man, I did this, and it was like a 7-1 and came in. You never hear that guy saying, man, I lost 70 quid at the weekend on bets because most of them didn't win. You never hear that, right? It's the same with YouTube investors. It's exactly the same. It's pretty funny. Collab with CoffeeZilla. I would love to talk to Coffee. Actually, I have spoken to him a little bit. I actually made a video. If you haven't seen it, you should go and watch it. I've spent an endless amount of time on it. It's called The Fake Guru Trap. And I spent probably 2 weeks of my time making one video, which is insane for a guy. I normally put out several a day. And it samples a few bits of CoffeeZilla's videos at the beginning. And I actually asked permission, so it's all legit on that front. I really like the guy. I like his content, but he's busy. He does like one video a day now, so I don't think he'll have time for me until maybe we're a bit bigger. We'll see. Buying dip in Microsoft and Apple right now. I bought into Apple. I put a little bit in Microsoft, but I bought quite heavy, like relative to my portfolio, quite heavily into Apple. So yeah, I agree. I'm in on all these stocks because I don't see any long-term difference. Do I watch the Lewis Morgan podcast? I don't, if I'm honest with you. Maybe I should. You're right. I haven't seen any portfolio updates recently. Where's everybody? Well, I saw a few about a week to 2 weeks ago when things went quite so bad. But yeah, I'm looking forward to them. It's going to be good. Right. Opinion leveraged ETFs for single shares. Leverage ETFs. Well, I'm not going to go down there. So I don't do CFDs except for occasional just research and personal learning purposes. And I strongly discourage anyone who is not a pro. And this is one where I'm not a financial advisor, so I can't tell you what to do. But if on a personal level somebody asked me, I would strongly discourage anyone who is not a pro investor, pro finance person from ever going down the leverage CFD route, because it is an incredibly easy way to lose money. And even the people that do know what they're doing, there is a very, very high risk. Oh, look, 1 second, look at Tesla. Tesla's going up. Look at this. Look at this bounce. over the last few minutes. Look at this. We're almost into the 580 territory. Nice. But yeah, I would just strongly urge anyone who doesn't know what they're doing to stay away, because the vast majority, they have you have a product where there is a legal disclaimer that has to be put on the product when that product gets sold, and it tells you that the vast majority of people will lose their money, like 100% of their money. Like other products that have those disclaimers are things like alcohol, cigarettes, and other things. And I'm not saying it's as bad as them, but I'm saying there are really important risks that people need to be aware of. And I think some channels really overlook those risks. And the problem is, for somebody who isn't a pro, you are much, much more likely than average to be at that losing end of the spectrum. So I don't really talk about it on my channel for that reason, because I think the majority of the people watching will not be experienced investors. I'm not an experienced investor. I don't feel like I'm experienced enough to really be able to, like, I will talk about CFDs and I understand them, and I worked in finance for a long time. I do get it. I worked on, the trading desk in my past life, like, but I don't feel like I'm equipped to be able to properly be doing it. But anyway, what's your average price in Tesla, by the way? I think I'm on 603, but mainly because on this portfolio. I have some others where I bought in cheaper, I think, but let's have a look. Yeah, 603 average price. It's not bad. It's not bad. I mean, I know it's down now. Everything looks bad now, but I think it's pretty good given where it was over the last few months when everyone's investing really heavily. So I'm quite happy with that, actually. Who asked that question? I can't even see it anymore. Ronald bought Tesla 800. I keep showing people. I bought Tesla at 875 in my Etoro portfolio. Don't feel bad. I don't feel bad. I'm keeping it. It's going to be good. We're all going to be all right. I think maybe do your own research. Nothing's guaranteed. You might lose your money. I need to do these disclaimers every now and then so I don't get hit on the head. You know what I mean? All right, guys. I have to run now because I've got to go and do something at 5:30. Unfortunately, so I'm gonna. It looks like. Look at this. Like, just before we go, look at this recovery. We are bouncing. We are going places. Wow. Maybe I shouldn't jump. Maybe I need to push back. 1 second. Let me see if I can push this thing back. Because this is pretty interesting. Oh. Wow, look at these candlesticks. Like, this is a good period. Although I'm not sure what it really means, whether this is just a bit of a short-term optimism, but we're up like $25 in just a few minutes. So that's interesting. Tesla stock goes up if you keep talking about it. Okay, I'll keep talking about Tesla, and maybe then we're going to be really, really wealthy. I actually test drove a Tesla for fun many years ago, before buying something that is completely the opposite of a Tesla, which is a Jeep, and I loved it. I love the car. The thing I really like about their product strategy is that they didn't try to go and start with like everything. So earlier on, the inside was really plain and basic. And like other than the fancy screen, right, everything else, like the quality was relatively simple and basic and like not actually that great. But I actually really like that because what they did is they didn't try to go and win on everything. And they try to go and optimize and say, like, what are the important things? And this is the one thing that's really important to me. Some companies go and try to go and do a product where they try to win on every single element of that product. They go and say, well, we're going to be the most like luxurious inside. We're going to have the longest range. We're going to have the most power, the fastest. We're going to be like have the most luggage space. And Tesla early on kind of focused on like the one aspect, which was long range electric vehicle that is practical and works, and invested a load of money into the infrastructure with the superchargers. But a lot of the elements about the car really weren't that good. And I think like it's easy to forget, like they've definitely improved over time, but I actually think that's a good thing because they think like a real product company and they focus on the critical points. And I think that's what's going to continue driving them because like the stuff what they're doing now with the factories, I keep talking about it. I'll hopefully next week, once I've had a bit of time to spend on that model, we'll talk a bit more depth about what that means for my target price for them and why that target price is where it is, with like a lot more numbers behind them. Hopefully I won't lose too many people and people won't click off immediately when we talk about it, but So many comments. I'm sorry, guys. Yeah, it's 5:30. I know. I've pushed back. I can go a little bit later. I've got a couple minutes. 600 is going to be resistance. Resistance from what? Who's going to be resisting? Is there people waiting? Waiting there? Like, who's going to be resisting? Are people going to be selling at 600? I don't know. No, I'm not sure. Every other manufacturer will make electric cars better. The thing is, there's a lot of science to building the electric car internals and the components and optimizing them and stuff like that. And that science is more complicated than people think. And like the people that are starting production now, in terms of the production like science advancement, in terms of how much they really know the IP, etc., are probably years behind Tesla. And I think that stolen march is one element, but the other element is, so out of the major manufacturers, Jaguar is the only one that I can think of that have said that they're within short timeframes are going to go full electric. A lot of other people have made statements like, oh, well, 50% of our fleet is going to be electric in 10 years or something else like that. And I think like people are sort of sitting there waiting to see what happens. And they risk becoming like yet another industry that is just being completely outpaced by the challenges, and they're not following the challenges and doing the same stuff. That's just my personal view, and that's why I'm so bullish in particular on Tesla, which is like there are people who have huge money, like, you know, Mercedes, everybody else, like they have a huge Ford, like a great example, right? Huge money, armies of factories, loads of smart people working there, but they're not pivoting, and they're sort of like sitting there on the sidelines going, yeah, well, we'll probably do something. We'll release, we've released the Mach-E, but that's it. Like almost everything we sell is still petrol, diesel, etc., mostly petrol. You know, I'm not seeing the challenges turn up. As an engineer, I agree with Cameron about Tesla. On what front? I'll be curious to know. Lockdown finance. Cliff's been buying in at set points, most recent 400 post split. Jaguar behind, but at least they're committing, they're jumping in at the deep end, and they're happy to try to swim. But, well, all right, guys. This is looking promising for the rest of the trading session, but I'm gonna have to switch off now. Thank you very much to everybody who joined. I again always say the same thing. Really, really appreciate it. Thank you so much. It's been a real pleasure, and I'll see you guys later.